Hello, everybody. Welcome to my desktop. Hopefully let me make sure I'm
I
sharing
don't
my
think you're
desktop here.
sharing. Yeah.
Yeah, hello, Andy. Hello, everybody.
Hey, Steve, how you doing? Hey, David.
There's the magic button.
Thank you,
Ta-da.
Dave.
All right, cool. Questions. Looking good. Hello, David. Hello, Dave. Everybody. All right, well, we're back for a Trade of the Week webinar. Still a little under the weather. I don't know what I caught 2 weeks ago, but we had to cancel 2 weeks ago. I was flat on my back with RSV or something. I don't know, something's going around out there. But anyway, we're ready to go for every other week. It is today the 15th? Yeah, 15th of November. How about that? So we'll wait for Scott to come in late here. We'll just get going with the disclaimer. Just a reminder, we're users and traders of our own accounts and also employees of Trade Ideas, but everything we talk about, we'll look at some charts for sure, but all that you see and hear from us are going to be our opinion only, not trade ideas, and certainly not financial advice. A lot of changes are coming to the trader room. Not going to announce it yet, but there's a lot of changes coming to the daily trading room. Daily support sessions are now pretty much 12 Eastern. I'm going to have to work on this slide. We don't have a 3:30 Eastern anymore. I'll take that out. But please, please, please do come by every day at 12 Eastern and come by to this address right here, /live, trade-ideas.com/live, gets you to our noon Eastern. We're gonna have a different person in there every day, showing and demonstrating visuals, taking questions, helping especially new traders learn the system that they signed up for, which is a very robust system for sure. And but doesn't mean it's always going to give you a quick running start. Sometimes you need a little bit of help to get you going in the right direction, because there's many directions you can go. So please show up to those live sessions. It'll make it so much easier for you to learn. And just a reminder before we get going, we have our latest ebook written by our chief director of software, Dave Mabe. It's very unusual to have a strong developer also be a trader. There's usually Venn diagrams, usually pretty shallow with traders who are also developers, but we got one here. His name is Dave Mabe, and if you want to see where he's coming from, you can read his ebook down there at the bottom, /strategy. All right, so as people continue to pile in here, just a reminder that the theme I always like to remind people of is man and machine, human and machine. You gotta work together. You can't just be a human without a machine, and you certainly can't be a machine without a human. They work best together, especially in the financial markets, and that's really the way technology is going. So that's just always our theme. Here's the agenda for today. We've got a few trade of the weeks to go over. Some crazy stuff's happening out there. Market recap, I'll start with that. And then it's been so long since we've checked into a sector view, especially with the market kind of changing its tune out there. We'll take a look at some sectors and see which ones might be worth keeping an eye on for tomorrow. I'm going to pull a strategy scan off the shelf, which is really correctly how you do it. I'll get more into that concept later, but basically all scans don't work all the time. You got to kind of know when to deploy them, and we'll go through an exercise to do that. And then we just finish off as usual about 40 minutes or so into the hour with regular Q&A on trading, or any questions you have about trading in general. Happy to answer. There's 50 years combined wisdom now here between two guys, myself and Andy. 50 years is a lot. We've seen a lot of things. And then we'll finish off with chart requests. A lot of people like to maybe have us look at their favorite chart in the end and see if there's something. So hold on to those requests if you do have them. We'll take them at the end, and even the trading Q&A open questions. If you've got a trading related question, be it psychology or whatever you come up with, we'll do our best to try and answer that. But let's hold on to those until we get through the back test. All right, we'll save that for the exit. Let's start off with market recap, something that's not been said by me for a while because it's been probably a month since I've been in here. And a lot has happened for sure. Many things happened. Okay, technically we broke a trend line, we broke a channel for sure. You can see that. As far as moving averages go, we We held a very important day. So this was a giant reversal day. I forgot what happened, but opening down here with a giant green engulfing candle. This is what you call it. It was engulfing the prior day, and boy, did it. And these are the kind of candles you look back on and you go, wow, wish I'd have been more bullish on those days, because when you see engulfing candles like that, if they're up here in red, then watch out below. If they're down here in green, well, be careful if you're short. And then what happened is a series of conquests and tests, conquest of the 10 and 20, and then found support. Big deal. That was a big day right there, finding support on that 20 and 10 that were curling, then another big push up, and finding clear air above the 50-day, but dropping back into that zone, and then using that 20-day moving average as a backstop, and then the giant gap move higher that we basically just had last week. Can't remember the catalyst for it anymore. They all run in my head simultaneously, but you can see the market has gone from making, thank you, CPI, yeah, caught me off guard too, making lower lows down here, right? All of a sudden, this engulfing candle stopped everything in its tracks. And since this giant engulfing candle, we now have higher lows again. So in the bigger picture, if this is just a bear market rally, I think we might find out soon at the 200-day, as you can see right there to the penny. The S&P wanted nothing to do with the 200-day. Well, now we're back again. We've conquered all these moving averages, a flat 50. Remember, anything above the 50 is considered in generally good health. But there's this 200-day moving average really looming up here. So this will probably have a lot to say, and it probably would even make perfect sense if you were to do a channel right there. You know, you can just see that this might be a new channel developing. Hold that thought. That's why I'm going to pull off something from the shelf, and we're going to back test it for this market only. We're not going to include the whole thing. We're going to look at this and say, well, how many days with that? Well, let's back test this bullish scan and see how it works. So that's kind of a teaser for those of you that are here right now. So that's the S&P. The NASDAQ and the Qs never really were as strong as the S&P. And why do I say that? Because back here, all the space we had. Remember, the S&P was touching its 200-day. Well, the NASDAQ had already played that game back here, and it wasn't interested in getting higher. So relatively speaking, the NASDAQ came into all this a bit weaker than the S&P. Then again, we have that giant engulfing candle, and all of a sudden we might have some lower highs. Excuse me, higher lows. Let me pull out the old and dust off the old RSI divergence, bullish divergence. Now, where would this have shown up? Back here, right? Going into that reversal candle, you can see the RSI made actually a higher low in RSI data points versus the price point. That's what you would call a bullish divergence, bullish diverging market. Prices are going lower, but they're doing so with less oomph, as indicated by the RSI. So of course, hindsight is always 20/20. We can look back and be superhuman in our analysis, but in the moment, you know, these are the keys we have to look for. So again, NASDAQ giant engulfing pattern has not looked back. You know, some of the key names out there, Apple, there's the engulfing on Apple, test those lows and bouncing. So there's a lot going on out there. I don't really know where the favorite sector is going to be. We're going to save that for a segment coming up here to see if we can identify anything. But there's some weird stuff going on out there nonetheless. You want to add anything to the general market summary?
Yeah, I think this is a good practice for everybody. If you put back up the SPY, Steve, and zoom out so you get January 1st on there. And then, okay, now draw a trend line to see, and I don't know what happened to your moving averages, but
oh, I'm on the RSI. I'm on the RSI. Hold on, that's why.
Okay. Okay, there we go. Yeah,
right.
Now, yeah, just go ahead and draw a trend line, and you're going to see it marries up well with that. Well, that I meant a real trend line, but that's okay. You guys can kind of see if he. There you go.
Click.
And you're going to see it marries up pretty well with that 200-day moving average. So, yeah, so to me that's a key level. So actually, the trend line is probably more predominant as far as you know, an indicator for me as where we're running into trouble. But that you put the 200 right on top of it. It's going to be a tough level, I think, to get through. But we'll see, man. We definitely got a little momentum here. But
That's the
see what
that's the
happens.
tough level we're coming into right
It's a
here that
very
you're
tough level,
talking
huh?
about. I mean, this is a
Mm-hmm.
very long channel here if you want to look at it that
Mm-hmm.
way.
Exactly.
So yeah, we spent a lot of energy getting up here, and this is kind of what we were getting at earlier. Is this a bear market rally, or are we back in a bull market again? I don't know. I think that's the area that Andy was calling out, and I, that are going to have to be resolved. The trend line in the 200-day there. That's a mess of sellers waiting up there to see what happens.
Mm-hmm.
So
Exactly.
yeah, there's your market recap for the day. It's or is it a Christmas rally? I think it's too early for that still. That always seems to show up like around Black Friday next week and into Christmas, but who knows this year? Everything's been crazy this year. That's for sure. Okay, so it's got some races down here after market, not doing a whole lot. I'm just going to go right into the trades of the week and try to remember them chronologically here. Let's see, I'm going to go to a certain channel I got, which will remind me which was first. So I want to go all the way back to WTI. WTI, and this one did not make it easy. Essentially it was looking to really hold this cup and handle, which gave us a little bit of a push, and then boy, just driving back down into the 20-day, never closed below the 20-day, and I think that probably was the risk level, and then just came back and rallied higher, and then ever since then kind of fell out of favor. So that's been 4 weeks since that call. Definitely some meat on that bone. And what came after that was Shop, and this was another one that was also early and then a giant horrible shakeout. Um,
Oh,
trying to
it's just
remember.
brutal.
Yeah, we were breaking out right up there and
Mm-hmm.
trying to buy the momentum. Earnings, of course, being a big catalyst. There's the earnings volume bar and the earnings date, and it never really held this. And the key, I think, was to not lose control of the 10-day SMA. Well, it did so there, and there. Then it broke down, tested the 20 and 50, and as it were, in hindsight, being perfectly 2020, that was the line in the sand for Shop, and then before it took off again. So, the timing on these things is not always going to be perfect,
Mm-hmm.
but remember, we can do something by just putting a name on your watch list. Most of these names are over here on my hearted, my liked. I want to keep track of these things because it's very easy to be early. It's very easy to get caught up in the low liquidity noise that's happening out there. And sometimes these pullbacks go deeper than you want, but then you pull it up one day, you're like, oh, wow, this thing really found support lower than where I sold it. Maybe this is probably a better entry. But the point being is it moved in the right direction. It just didn't give us the right timing that we wanted.
Mm-hmm.
But these should be on your watch lists going forward. And then we had MGY, back to the energy. Now, speaking of, these should remain on your watch list. Here we are. This was earnings, and it gave us a nice push through earnings, broke through that wedge, but then it just immediately pulled back. And I believe that, let's take a look here. Let's just see real quick. I'm looking at the document to see what the actual risk management was on that below the 20. So it never closed below the 20. It was an ugly candle there, but it never even got to the 20. So technically, even though I'm not in it, by the way, I'm leaving for town for a week. That's a whole other discussion. I don't like to leave town with positions on. So I'm going out of town pretty light with a couple core holdings and a lot of cash and some PSLV. But the point being is this thing is right back on your radar again. So I'm going to pop this in tomorrow. Might day trade it, but tomorrow's my last day before I leave town. But I'd like to know if MGY Magnolia wants to take another move higher with 9% short the float and take that level out. Pretty good consolidation there. Again, not the best timing in the world. A lot of things did this in the last couple of weeks. These big pullbacks, find support, and then bounce. Which brings us to today, NerdWall. Yes, NerdWall and RDS nerds. Couple things going on here. I originally thought that it might be better to have a 14 entry, but the way things have been expending so much energy getting to those levels, the play really was right there going into the weekend. And so I changed the wording. I changed it to 13, which basically just said, go ahead and take a position in this thing. And let's see how this is a bull flag coming after earnings and beautiful volume as well. Let's see how this bull flag wants to resolve. We've got beautiful fanning out of the 10, the 20, the 50. The only thing that will get you out of this trade is a close below the 10 SMA, which is our momentum indicator. So again, this is 2 days ago. Go yesterday, didn't touch it, and there it is today. The old drive down, right on the open. It's always on the open, right there. See if the algorithms can get anybody to just shake the loose coins out of their pockets. It always happens in the first half an hour of the day as the stop losses are being run. So basically, I didn't sweat it. Just said, let's see how it closes. If this thing closed below the rising 10 SMA, I was perfectly prepared to tell you guys I'm out. You know, it was a 20-cent loss, what have you, whatever. But what I wanted to do this week was try and get a little better entry than, you know, a breakout, and start helping people focus on buying and leaning on, you know, these moving averages. So this whole trade is really predicated and depends on what's going to happen with this 10 SMA. I love the fact that it created a wick and bounced up and closed above. Let's see what tomorrow brings. Ideally, that test should bring maybe a test of these highs tomorrow, and hopefully we'll already be in it. If not, you know, that's your choice. But this is the play right here, is to just hold the line, as they say. Just do not close below that line. And if I get some nice movement tomorrow, well, guess what? I'm probably going to be a seller of half to the people coming in and buying the breakout, because that just seems to be working a lot better. I don't want to get caught up in the dogma of every single week having to wait for a trigger to come from below. I want to help people kind of learn that you can establish a position. You could even establish half a position, and all of a sudden your high-low ticker starts going, then boom, you add to it. You got your second half. But the most important thing is playing the daily chart here. We've got ourselves a bull flag pennant, whatever you want to call it. If this thing were to roll over and close even 10 cents below this line tomorrow, I'm out. That tells me that the momentum is not interested in continuing. For many reasons that could happen, but again, consolidation after earnings, good green candle gap up, good volume. There's every reason in the world for the stock to try and attempt to establish and come out of this flagging pattern above this 10 SMA. You want to add anything, Andy?
No, I totally agree with your logic there. And as a matter of fact, I have had more luck today. Going back to that shop, not trying to buy breakouts, but letting prices come back to me, because let's face it, we're in a volatile environment, just like you saw today during midday. Some news came out and stuff got hit. If you're patient, you can get your price a lot of times. So,
I did want to mention that too.
Yeah. That's about it. Yeah, that's it. So as a matter of fact, I'm in there with you. So I like those kind of entries.
Well, what I wanted to mention is be careful out there. There's some really screwy stuff going on out there in geopolitical news right now. This was just a rumor. They don't even know what happened, but you've got these market-making algorithms that literally read the wires it comes across and send the orders out. You're not going to beat them. You're not going to get ahead of them. I guess what I'm trying to say is be careful out there, guys. I think there could be a lot of this kind of stuff coming in the days ahead. I'm actually quite pleased that my week off in Cabo is going to occur right out now, because I really don't want to deal with the volatility and the illiquidity and the momentary notice of some crazy ass geopolitical headline coming across. Just be careful out there, and that means don't be just leveraged to the hilt and rolling the dice out there hoping for your move. Have some risk management. Know that we could literally step on a landmine at any moment out there with the news and the volatility. So just be careful. That's all I wanted to say.
Yep.
All right. So no AI discussion today, even though it did have some great trades in there. There's just more to talk about of interest personally, I think, for Andy and myself. So what I wanted to do was, I think wanted to go to the sectors first and just kind of get a feel for where we are sector-wise. Yeah, let's go. We did the trade of the week. Okay, let's go to sector view. So I'm looking at this for the first time with you guys, and ideally I'm looking for something that's consolidating or hasn't already ran and looks tired, something that might give us a chance tomorrow, because let's face it, the general market here looks a little tired. We've had a pretty good run. The market was on a hair trigger of like I said, that sell news today on the headlines. Market's probably looking for a reason to consolidate, so we don't want to be chasing things. Let's just start with Andy's been nailing this sector, the China sector. You're guaranteed a gap pretty much every time you wake up if you want to trade this stuff. But he's doing it, and he's been doing it. But I don't think I would chase the K-Web up here. I'm looking for
No,
something that's domestic and consolidating.
there you go.
Okay, the oil drillers. Okay, so this is kind of like that MGY pattern that was last week's trade of the week. Believe it, like it or not, this is a flag pattern. So the OIHs, I think we need to mark up these OIHs, and if they decide to go taking off tomorrow, I'd like to know about it. That MGY would, probably react in the WTI and whatnot. All right, DBC, the commodities, right? Commodity Tracking Index. Well, this is kind of interesting. It's already consolidated a lot, but it's under its 200-day. Now, this is it's a tricky sector, commodities. It includes gold and silver and all that stuff. But I see a giant wedge forming there. I don't know who the victor is going to be. Maybe wait and see who winds up consolidating out of that wedge. Here's the treasuries. Just people trying to bring interest rates back down by buying treasuries. I'm sure that's a wish for many right now. DBA trapped under its agriculture fund, trapped under its 50. We're not interested in things trapped under their 50. Here's the energy, very similar to the oil drillers, but the energy, again, there's enough consolidation there to be aware of. So keep an eye on oil and energy. There's some more interest rate sensitive stuff. This is actually more of the, I think, closer to the mortgage related stuff. 7-year IEF ETF. Interestingly enough, look at how the 50-day gave it a little trouble there.
Yeah.
And it came out victorious today. So maybe we're going to have a little bit of a pause in more mortgage rates going forward, just kind of based off that technology, that technical analysis. As much as I love gold and silver, guys, and actually I sent it to Andy. Michael Burry, the famed Michael Burry, just came out and said, gold and silver with starting to make a better case for gold and silver when you start to consider this crypto contagion, he called it. And we all know that the FTX blow up and this clown running around out there in a t-shirt, it's got some explaining to do. There's probably a lot more going on there than people realize. It's going to get interesting. But Michael Burry is just bolstering my point. I love gold and silver, but I wouldn't chase it here if it was a trade. I mean, obviously the market is starting to catch on to something. All right, GLD got ahead of itself. Maybe set yourself some pullback alerts, and if you get gold to pull back to that level, you start looking at some miners or whatnot. But that's a bit stretchy. I wouldn't chase anything like that. Probably look at silver too. Very similar. Silver has recaptured its 200-day. And by the way, I don't buy SLV, and I don't recommend buying it at all because they can't substantiate the silver they have. But PSLV, the Sprott Physical Silver Trust, they can audit and substantiate what they have in physical. This could become a real story down the road. Sometimes I'm just a little early for my own good, but so was Michael Burry, right? All right, the IWM, trying to get these are the small caps again, trying to get through the declining 200. So they're one of the first. We didn't even look at that. SPY and Qs are not even at their 200-day, but people are jumping into the small caps again. Definitely some pent-up strength, relative strength in the small caps. That's interesting. XHB consolidating at its 200-day. The home builders, obviously lower interest rates last few days have helped them, but nothing really jumping off the page. Retail looks like it got right into a topping tail at the 200-day. Probably you're ready for a pause in retail. Solar, nice consolidation and emergence from the consolidation. So solar is back above the 50. It's healthy again, but I don't know if the timing is perfect. The REITs, IYR back above their 50 and consolidating. Could be worth keeping an eye on. Software is going to be just like tech. There's the SPY. We looked at that. More agriculture. Healthcare sector is consolidating. And it's probably even worthy putting an alert right there. So I'm going to put an alert too, along with oil services and XLV. Healthcare and oil services are consolidating nicely. And again, guys, we're just looking for the rotation. things are not going to rotate into gold or into other things right now. That's a little bit, extended. The rotation is going to occur into things that are consolidating. Here's the financials, the banks. They're back above their 200-day and trying to hold on. So that's, definitely a change of tune. Huge change of tune from back here where the financials were breaking down.
Mm-hmm.
I think that engulfing candle we looked at and talked a lot about probably had the most benefit to the financials, it looks like, because they just took it and ran. There's silver, we looked at that. Qs, we looked at that. The airlines, they don't like higher oil prices, and they're also slamming right into their 200. I wouldn't be bullish airlines right now. Here's the steel. So steel started taking off, and yeah, I think I wouldn't chase steel stocks like X or CLF or Nucor, but look for some consolidation and watch these moving averages are starting to fan out again. They don't look too bad. And semis, don't chase semis. Look at that. I mean, you're just asking for it if you chase something like that. So again, back to the rotation game. It appears to me like oil service sector, OIHs, along with that MGY. Remember that was trade of the week last week. Put an alert back in that one. And what was the other one? Healthcare, XLV. Those two seem to be consolidating. Something to keep an eye on maybe going into tomorrow. Whereas the financials and the semis and gold and silver, they've all kind of had a bit of an extended run. So anything that caught your eye that I might have missed there?
No, just for giggles, put up ARK, ARKK, just see how that's performing since
It
that
did
was
this
one of the
morning,
most
yeah.
beaten up. Yeah.
Yeah, so it went from being afraid of its shadow here at the 50 SMA
Mm-hmm.
to recapturing it. Dun, dun,
Mm-hmm.
dun. So that's an interesting shot across the bow. And again, small caps. That's why we saw the IWM looking stronger. I bet you anything that's diverging like crazy too. That big bottom right there. Oh, look at that! It sure is. How
Yep.
about that? And then that was a horrible draw on the second one. But yeah, into
Yeah.
long
Long
extended.
one.
Maybe Kathy Woods is finally going to get a break and stop having to take Xanax every night to go to sleep. All right, so I want to move on here, and I want to bring up an old scan, and I want to qualify it by saying it's sometimes you need to do that. You just need to go to the shelf, grab an old scan, and I think I restarted, so it's gone. Let me go ahead and grab it from the cloud. It's one of those 130 plays, and I'm going to bring it up, flipped. So it's a long, even though they're going to show as new lows. All right. So let's push this over there. Really going to focus on the 130, which is a 5-day moving average on our 15-minute chart. And I'm going to make an assumption, and the assumption is as follows. Basically everything I said on the intro. Did we just turn the corner there in the hang on, let me let my system catch up here. Did we just turn the corner there on that low and we're moving higher, or are we just in the channel? Well, let's just kind of count these days ballpark here. 5, 10, I'm going to call it 20 days since that reversal candle. So I only want to back test 20 days here. I'm going to do 25. It looks like more than 20. And I'm going to use this scan called, it's flipped. Instead of slamming into the 130 from the underside, which was a short call, this one is going to show us things that are hitting the 5-day average, which I call the 130. If I could get a better chart, it's not broken, which is this blue line right here. So just today, let's go ahead and look at today's symbols and see what we got. I like the earlier in the morning ones because they're the ones that are usually running their stops. That one ran. This is way too early. Hold on. Okay, well, that one didn't hold. NTR didn't hold on the open. Again, we're just looking at today. That one barely held. But what I'm going to do is I'm going to back test this in a way that just maybe kind of gives us a little bit of confidence if we are going to continue in this there it is right there, run down and tag that moving average and get an alert. If we do want to continue to move higher, let's just see what the numbers say. So I'm going to go and I'm going to back test, right click and back test the strategy. And first thing I'm going to do is open up the time frame so we can see all the junk as well as the other stuff. My exit, we're going to make this a, let's just see what happens if we hold on 90 minutes. This is not a swing trade. This is a intraday bounce. It's going to be a new low, and it should be something that you should be able to trust for 90 minutes. So we're going to hope. So risk management, we're going to risk, let's risk 1.5% to make 5% in that period of time. Can't go wrong with that ratio. And here's where we're going to take it down to, assuming, the last 25 days, if we're going to continue, is this still going to work? Now, what I'm doing here is if I go back and look at all these days, we literally have the tail of two tapes. We've got all that sell off, and then we have a reversal. And so we know from looking at the major indexes here that 25 days is, kind of a safe one. I've got the 20-day 130 scan flipped, looking for down, but going long. That is correct, David. So here we go. Let's simulate buy, 90-minute hold, and let's see what happens. And of course, we're going to want to optimize. But I think, the point being is that we're looking at only the last 25 days, because if we were to do the whole thing, we get kind of a skewed result. Obviously, this doesn't work that great in a down market. So initial settings are looking okay, not that great, but I think as we go into optimization here, we're going to start to see some things. All right, so let's go into 15-minute times. Okay, so this thing starts working pretty well at 6:45. Anything before 9:45, I'm going to cut out. So we'll start this at 9:45 Eastern, and we'll end it at 11:15 Eastern. That's a huge chunk of these trades that aren't working. Now, this is a very important optimization because, as you've heard me say a lot, yeah, these algorithms are out there in the first hour, or first half an hour of the day. They're really trying to shake the weak hands, and this scan is going to try and identify a buying opportunity at that point. So for me, it makes perfect sense that this is where our meat of our good trades are, in that area. So let's go ahead and run it again. We don't need to change anything except the time. We're going to start at 15 minutes after the open. And we will end at 8:15, 11:15 Eastern for those of you out there. But for me, it's 8:15. All right, we will simulate buy just based on that one little change. See what we get. Don't freeze on me now.
Well, while it's doing that, you can explain to David why what you did with that flip scan. I think it's kind of confusing.
Okay, certainly. So the scan it used to be called slam into the 130. And so what I did was, on every configuration, you have this button where you can flip the strategy from highs to lows, and all the filters become inverted as well that need to be. And so it's a common thing. Anybody can do it, and it's super easy. Just create a second scan, duplicate it. So I went flipped, and we're buying now instead. So now, after that little change of pace on the time of day, we've increased our scans here a little better. Let's see what else we can do here in optimization. We did time of day, all right, good enough. Price, most of the prices look like they're under $50. The good green stuff does anyway, but then we've got some more. I'm gonna go ahead, I'll make that a minimum. Set the max value of this strategy to $50. So this will become a $50 max strategy. We'll make that change right there. Now we will dig into the other filters here. Let's see what else we can find doing the optimization process on the other filters tab. One of the first things I like to do is check and see, where was the S&P that day? What was the change on the day? So S&P change today percent. Let's do 0.25% intervals. And it looks like not really learning too much other than all that's okay down there. But it looks like no more than, geez, I guess I guess I would stop right there. So I'm going to make that the max, no more than a maximum of the S&P up 0.5% on the day. We'll make that change. And I also like to see what's going on with the VWAP. So it would be what, change from VWAP. Or distance from, what am I looking for here? I don't want the dollar value. I want the change from VWAP. Why can't I find that?
Look at distance from VWAP.
Distance, yeah. There it is. Thank you. Lost it. That was the keyword, distance.
Yeah, it can get confusing. They use a lot of different.
Okay, distance from VWAP. Bang. Interesting. A lot of green in there. Looks like it doesn't really matter.
You can put the interval down to like 0.20 and see what happens.
Oh, true. Well, let's try that. Let's do 0.25.
There you go.
Distance from VWAP. Boy, there's a lot of green in there. That red isn't doing too much either, so there's really nothing to be done there except
it's true.
that one line right there, but then you're missing out on all these others. So, I'm going to go ahead and run it again directly from the scan since we made some changes. Back test. There's other things we can do too, but let's just do a quick simulated buy. And then we'll see real quick if holding it shorter or longer makes any difference. Okay, so pretty good return. 60% winners. I'd like to have more of a stretch between the average winner and loser. Let's experiment a little bit with the time held. What if we went to the end of the day? What would that do? Would that change anything? An all-day hold? No, it's actually worse on a few of the metrics there, so that's not as good. What about a 1 hour hold? We'll do one more 1 hour hold and see what that looks like. And right now, guys, if you have those questions you're sitting on, go ahead and send them in. If you want to look at a chart or any trading questions, now's the time to start sending those in. Let's just see what happens on a 60-minute simulation cell. If that improves or declines the results. Yeah, looks about the same. So, this is basically saying that as long as the market's kind of holding up, this is a decent, 90-minute strategy to try and, buy on. And the whole point is these are new lows, guys. We're not chasing new highs here. If you're chasing new highs in this market, you better be darn sure you've got the momentum and the news and all that stuff that Barry does such a good job of in his room. Just buying a new high for the sake of buying a new high, not a good idea in this market. I want you to start thinking contrary. So that's why these are new lows, but they're at a level where if you're wrong, it just won't hurt as bad. And I'll go ahead and I'll drop that into the chat window here on our GoToWebinar, if I can find it. There it is. Pop that in the chat window. So yeah, if anybody has any questions about trading or wants to look at the chart, pop those in there now. And this is, I'll just call it buy the 130 because that's what we're doing. And I'm dropping that cloud scan in the chat window. It's not the questions window, but the chat window. Dave, you're always watching Costco, I think, aren't you, Dave? You're a Costco junkie.
Yeah, I was looking at that today. Actually, when Walmart was hitting highs, I pulled it up.
It's looking good. Now, I know I kind of poo-pooed the retail a little bit earlier, but this individual chart is rather nice. Your fave, yep. Beautiful job reclaiming what once threatened it, the 200. We've got 1, 2, 3, 4 days above now. So that consolidation was pretty decent. Hey, this is starting to come into play where you're back in clean air again, something we haven't seen for a while. And you've got the moving averages under and supporting. That doesn't look bad at all. When I looked up the RTH itself, it seemed to have looked a little bit more tired than that one. But nonetheless, that's not a bad looking chart. Walmart's trying to make a comeback too. A lot of
close to all-time highs.
Just broke out of that one. Okay, Gregory, how would you set up a daily double bottom scan? So that type of, oh, daily double bottom. We don't have a double bottom in the daily. We've got, or do we? Do we
No,
have a Market Explorer double
that's
bottom
not.
or a,
Yeah, the Market Explorer. I don't know if it has a check.
no, when I first read that, I was thinking it was you were asking for intraday, and that's why I got kind of optimistic about an intraday double bottom. Um, I really don't
Let's
know if it's
see.
possible to have that drawn with the daily chart. But in my world, you could do something like this. We could let's yeah, we'll go to like 1 hour market time frame here. Go to 1 hour 60 minutes and start looking for. We have a scan called double bottom. Let's bring up an alert window and let's just start from scratch and double. But these are going to be in 15-minute time frames. So what the see hours of trading? I've got to qualify hours of trading. Okay, double bottom. How about 18 hours, 24 hours, 6 days, 4 days of trading? We do something like that, and we'll start to get some alerts on there. But again, they're going to be all um, on the 60-minute time frame, double bottoms that happened in the last 24 hours. And by the way, there's no reason I shouldn't have a volume filter in there for sure to weed out some of that stuff. Average daily volume, 500,000 shares. Let's just try that. Some different names. So that's really the best answer I can give you, Gregory. Yeah, I don't know if the Market Explorer has a double bottom. I might have to ask
It,
Michael for that.
it has a daily support, but it's a shorter time frame. In other words, it will show you daily support if it's only 2 or 3 days or 5 days. So it's not looking at a very long-term trend like, finding a double bottom going back 5 months ago or something like that. So it's more of a
This one at the
short term.
bottom here, is that what you're looking at,
No,
support and
up top
resistance?
where it says at support daily long term,
Yes,
three
right.
from the top. Yep.
Yeah, for the top, right. That's the menu I'm talking about. So you saw what I did there, Gregory. You just you go to New Market Explorer, and then from there, just right click and grab the server settings and go down here to the bottom, and you can sift through those. Wish I had a better answer
Mhm.
for you. Yeah,
Yeah,
it does.
take a look at
It's
some of
interesting.
those.
Take a
Yeah,
look.
it's interesting.
Yeah,
Sure.
for sure. Okay. Anything else? You guys, I think we might have it today. We got
Hmm.
Costco in there for Dave, and I'll
That's
just leave
right.
you with I'll just leave you with this, guys. Again, tomorrow, don't be surprised if more crazy headlines come through this market. This market's on pins and needles right now. Just be aware that anything can happen at any moment, kind of like we had today, for sure. In that
Yeah.
little pullback, in the scheme of things, it didn't look bad in
And
60,
there's
but
no liquidity when you start. I'm sure all you guys know.
yes, there's no
Jeez.
liquidity. The market basically is 90% machine liquidity driven. So when the machines all pull back at once, there's no liquidity.
Mm.
EC is an oil company. Let's take a look. Look at my daily. Just came off of earnings. Depository shares for petroleum. Yeah, I mean, it's trying. It's getting above its 50 there, and it's also sliding the pretty critical pivot point it's coming up on. So yeah, there could be something going on over there in that name.
It's a
Whoever asked
long
that,
base.
Lou, from long days. Yeah,
A long
yeah.
base, yeah, like a 7 month, 6 month base.
All right. Well, I'm going to assume Scott's ready to come in, and I'll pop up the exit show here and a couple of announcements for everybody, and I'll see you in 2 weeks.
Yeah, thank you. Just a couple things on our way out. We do have an integration with eTrade. It lets you trade commission-free directly from our Brokerage Plus module. So do check out that. It's very convenient. It lets you keep track of your portfolio, manage your positions, all that good stuff directly from within Trade Ideas. Go to trade-ideas.com/eTrade to learn some more about that. Similarly, we have an arrangement with Interactive Brokerage where we also connect directly through Brokerage Plus. And if you're not already an Interactive Brokerage client, you can go ahead and learn some more about them at trade-ideas.com/IBKR. And also manage all of your positions directly from Trade Ideas. We've got a code, it's fast data, saves you 15% off any new or upgrade subscription to Trade Ideas, just go ahead and apply that code at trade-ideas.com/price. Save you some cash on an upgrade or a new sub. And you can find Steve at TI Steve G. And we also have Trade Ideas, and we have some other handles you can find as well. And if you have any questions, go ahead and email us info@trade-ideas.com. And of course, like Steve is on TikTok, Today Trader, all that kind of good stuff. So thank you, and thank you, Steve. Have a great vacation. Thank you all. We have a recording of this session up later on tonight or tomorrow, and you get an email reminder tomorrow in your inbox letting you know where to find it. Thanks all. Bye.
See you next time.
Yep.
Bye.
Thanks, everybody. I'll see